JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 22nd of June 2020, so yep, welcome everyone. Welcome to this Monday's morning live session where we're going to have a quick look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. Yep, you can find it here on top, on the top panel, yep, if you click on the research page right there, it'll take you to the site where we basically throw out our daily analysis. So what you can do, guys, as well, is, by the way, subscribe to our strategic report, which we produce every morning on Monday. So yep, it is currently getting prepared. So yep, if you want to have one of those, you can always just sign up here, click on the strategic report here and subscribe. Now then, jumping into the statistics here in terms of the coronavirus. Now, the World Health Organization over the weekend reported a largest increase in total amount of cases to new infections. So yep, that apparently, if according to the to sources, that happened on Friday the 19th, but yeah, basically we can say that over the weekend, yes, it had the biggest surge in total amount of cases. So yep, although the figure here is still at around 8,950,000, some other sources kind of show that we have already surpassed the 9 million mark. So basically, unfortunately, of course, so yep, we'll continue monitoring the situation here, and everybody's now kind of getting worried, I would say, about the second wave. But of course, let's see how all this is going to play out. Now then, jumping into the charts. Now, the first one I want to touch on here is the Nikkei 225 index and the Japanese index. Here you can see that although it kind of it remains above this these two kind of tentative upside support lines, still the index today closed slightly in the red. It failed to move above this barrier here, the 22,624 zone, that one that I had mentioned previously last week, and we need to see a nice good strong move above this in order to aim for higher levels. And until then, we're just going to continue observing the price action here, because for now it's a bit of a tricky one, I would say. So in a way, what we're going to do here, even with the downside, we cannot really even talk about the downside yet until we first see a breakthrough on both of these upside lines, and then we see a drop below the 21,530 zone, which is marked by the low of last week, and then we could consider further declines, because the same time this could also place the price below the 200-day EMA, and maybe more sellers could see this as a good opportunity to step in. So that's why we'll wait for this one to either break through the 22,624 zone right here, which is the high of last week, or we see a drop below the low of last week near the 21,530 territory. So keep your eyes on that one. The German DAX, here the situation is also a little bit difficult. So on On Friday, the index closed slightly in the green. However, looking at the cash index right now, the price is currently sitting at around 12,156 mark. So basically much lower than its close, and also it's just fractionally above this level that I talked about last week, this 12,133 zone, because what I was saying last week, that if we get a drop below this area, below this 12,133 zone, then yep, lower levels could be met, but again, only up until this upside support line, because let's not forget that still overall the index remains above this short-term, maybe a bit of a tentative, but nevertheless an upside support line taken from the low the 19th of March. So in a way, even if we see a drop below this 12,133 territory, yes, we could aim for slightly lower levels, but this move lower could be seen as a temporary correction, because like I said, we are still above this upside support line. And in case the index doesn't go towards this upside line and starts pushing above the high of last week near the 12,484 zone, then yes, higher levels could be met straight away. Gold. So gold finally is moving higher, and you can see on Friday we had a nice rally here to the upside. This is what I talked about not yesterday, but on Friday. I was telling you guys to keep a close eye on this kind of little range here that gold is kind of trading in, and you can see now today we are seeing a violation of the upper side here of this range, and we're seeing a nice good push above the 1748 zone. So in a way, for now everything's looking quite positive here. If the commodity manages to stay today and manages to close today's trading above this 1748 zone, then yes, yes, we could maybe consider further acceleration to the upside, where we could aim for the 1763 territory, or even the 1795 zone here, and that's, by the way, the highest point of 2012. And let me just quickly drag this one back here. Yep, there we go. That's the highest point of 2012, guys. So again, for now everything's looking quite positive here, but we would like to wait for that daily confirmation close above this 1748 zone, because what we don't want to see here is something like this that we had here on the 18th of May, and that's basically we had a nice strong overshoot here, but the candle still ended the day not only below the 1748 zone, but also in the red. So that's why we'll wait for this one. Brent oil, quick update here. So with Brent oil, previously I talked about this upside support line taken from the low of the 22nd of April. So yep, that's wonderful. We had a violation of this upside line. However, we didn't move lower, because as you can see, this 21-day EMA together with the 36.96 level did provide decent support. So now what we can do is we can shift to this upside support line and draw it this way. Again, it's a tentative one. Don't focus on this too much, because what you should be probably mainly focusing on here right now are the support and resistance levels. Now, first of all, of course, the main focus here is on this resistance level here near the 43.40 zone, marked by the high of the 8th of June, or in other words, currently the highest point of June. And if we do get a nice pop above this, then yes, this would confirm a forthcoming higher high, and more buyers could be joining in. However, if by any chance this commodity starts breaking this upside line here, yes, maybe this could increase its chances to drift lower. However, as I've mentioned before, we'll wait for a drop below the 36.96 level and then aim for lower levels, because as you can see, it acts as both good resistance and support levels. So yep, that's why for now we'll be very, very careful here. And another thing that what we don't want to see here excuse me, is a possible range here between which is roughly, like I said, could be roughly between the 36.96 and the 43.40 levels. But again, for now, that's a bit maybe too early to talk about that. Bitcoin. Quick update here, because to be honest, not much excitement in the crypto world for now. But as you can see, this specific crypto continues to trade below the this downside resistance line taken from the highest point of December 2017. The pair, it continues to kind of flirt with this 9,300 level. So in a way, what we're gonna do here is we're gonna we're gonna definitely wait, because what we need to see here ideally is either a break of this downside line and a push above the another push above the 10,045 territory somewhere around here, or we need to see a nice daily close below this 9,300 level, because as you can see, last week it kept on flirting with this territory, but didn't really quite close the daily candle below it. So that's why we would prefer to wait for a daily close below this 9,300 level. AUDJPY. Now here again, it's a bit of a difficult one. Now this is what I talked about last week basically. Well, the pair drifted lower last week, however it still kind of remained virtually unchanged for the week. The fact that it managed to break this short-term upside support line taken from the low of the 19th of March, it creates this kind of worrying sign for the worrying signal for the bulls. However, if we actually, because this upside line is a bit of a tentative one, we can actually draw another tentative upside support line taken from the low of the 2nd of April here, and we'll see that the pair kind of remains still above this upside line. So that's the reason why last week, for example, when I was covering this pair, I was telling you guys to keep a close eye on some of these key support and resistance levels. So although this upside support line looks maybe even logical, still we would prefer to wait for a violation of this level right here, the 71.92 zone, the one that I talked about last week. And if we get a nice drop below this, this would also place the rate below the 200-day EMA here. So yep, that's why for now, guys, be very careful. Probably will take a bit of a neutral stand here for now, although we are still, let's say, above this short-term upside support line. But again, it's also a tentative one, so that's why we're not going to focus on it too much. And in order to aim for higher levels, we would prefer to wait for a push above the 74.47 zone and then aim for higher levels. USDCHF. USDCHF here could be forming a possible bullish flag. However, it's too early to talk about that. We need to see a break above this level here, the 0.9544 zone. I talked about this yesterday, last week. And in a way, if we do get a nice pop above this barrier, then yes, higher levels could be met. We could see a push above the 21-day EMA here, and maybe more buyers could be joining in. However, for now, to be honest, it's a very difficult one, it's a tricky one, so both kind of currencies could be seen as a possible safe haven. So that's why we'll wait for either a push above the 0.9544 zone, or we will wait for a drop below the 0.9460 territory in order to aim for slightly lower levels. Until then, we're not going to do anything. We're just going to observe the price action and, like I said, wait for a violation of one of these levels. GBPUSD. Now, GBPUSD is quite an interesting one. Last week, I talked about this one, and I was telling you guys to keep a close eye on this 1.8058 zone, which on Friday, as you can see, we managed to violate perfectly. The pair drifted lower. However, the bulls quickly pushed the pair back up, yep, they kind of remained fractionally. The daily candle here ended its trading just fractionally below this area, below the 1.8058. So in a way, for now, everything's still kind of leaning more towards the downside. We can draw a downside resistance line taken from the high of the 4th of May. You'll see that we're still trading below it. So yep, the trend is still to the downside. However, remain very careful. Of course, on one hand, somebody might say that the pair is already quite overstretched here to the downside, but till we get a clear reversal signal here, we can't really talk about any upside. So that's why for now, as I said, the trend is still to the downside. We could aim for levels like these here, the low of the 3rd of September, and that's marked by the 1.7794 zone. And by the way, that's the lowest point of September 2019 as well. So yeah, keep your eyes on that one. Slightly below that, we do have a this area right here, the lowest point of, is this the lowest? Let me just double check. Yes, the lowest point of July 2019, and also, if I'm not mistaken, the lowest point of 2019. So yep, that is correct. So that's also the lowest point of 2019, and that level is around 1.7562 territory. So something to keep in mind. But again, like I said, for now, guys, if you're looking for a possible kind of up move here, we cannot really talk about that yet because, like I said, we're still within a downtrend. Now then, just jumping into a few pairs which I've covered on Friday. So one of the exotic ones which we probably don't look at very often, but that's euro against the Turkish lira, and here the pair could be forming a possible double top here. However, we cannot really talk about that yet until we get a break below this level right here, the 7.3485 zone, roughly around here, guys, because this would be that neckline of this potential pattern. However, from the short-term perspective, I do understand that we need to kind of wait here quite a bit, but from the short-term perspective, what you could do here is keep your eyes on the 1.6180 zone here, marked by the high of the 29th of May. Because a nice good drop below this would also place the rate below the 21-day EMA, and maybe just maybe more sellers could see this as a good opportunity to step in and drive this one lower. However, if it continues to balance above this area, we'll still remain a little bit cautious, because for us to get excited about higher levels, we would prefer to wait for a push above the current highest point of June, near the 7.7964 zone, and then we could aim for higher levels. Euro GBP. Here finally the pair is pushing higher. So on Friday we had a nice pop here above the 0.9020 territory, which is the upper bound of the range. So basically now we can forget about this range, and what we can focus on here right now is potentially this upside support line. And yep, so again, for now it seems that yes, the trend is slightly to the upside. The fact that it managed to push above the 0.9020 territory, yes, that's a wonderful thing for the bulls. However, today we're seeing a bit of a correction here to the downside, but the rate continues to balance above this 0.9020 zone. So in a way, if it continues to do so, yes, then yes, we will aim for that 0.9150 territory or even higher. So for now, this is going to be our, let's say, main target in the near term. If we do reach this level, then yes, we will reevaluate everything again. But if this upside line gets broken, yes, of course, this kind of increases the chances of a possible move lower. However, we would still prefer to wait for a drop below the 0.8864 zone, and then we could consider further declines here. But until then, even if we do get a break of this upside line, we would prefer to wait for a drop below the 0.8864 zone, as I said, yep, and then because this would confirm a forthcoming lower low and more sellers could be joining in. And finally, Euro USD. So this pair continues to drift lower. On Friday, it tried to get back above this 1.1237 zone. This is what I kept telling you guys. Keep your eyes on this, because keep your eyes on this level, because that's the kind of this is near the so-called neckline of this pattern, which I've mentioned last week. In the beginning of last week, I was telling you guys that this could be potentially forming a possible head and shoulders here with the neckline somewhere around here. And as you can see, we have managed to violate this area on Thursday, and yep, it drifted lower further. It kind of went for further declines. However, it's currently getting a hold up near this 21-day EMA. So this is what I was also mentioning to you last week, where I was saying that be very careful here, because this is where the hold up might occur, and exactly this is what's happening right now. But if you want to aim for further declines, well, probably keep your eyes on the high of the 27th of March, which is around the 1.1147, and a nice good drop below this could yep, open the door towards lower levels, and we could aim for the 1.1019 territory, which is marked by the high of the 1st of May. And yep, we'll take it from there then, because we want to see how far, let's say, this could travel lower. But again, as I said, for now, guys, of course, keep your eyes on the 21-day EMA. If we get a further move below it, then yep, that's wonderful news for the bears. If we get a violation and a drop below the 1.1147, that's even better for more sellers. So yep, further declines could be possible. But if this by any chance starts reversing and pushes back above the 1.1237 zone, well, we'll be very careful here, because we would, in order to aim for higher levels, maybe we would prefer to wait for at least a break of this downside line taken from the high of the 10th of June. But even then, still the more comfortable level after a break of which we would consider higher levels could be here near the 1.1384 zone. But again, like I said, for now, be very careful. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you wanna join my videos tomorrow, because let me tell you that today, later on, we're not going to have the traders tea time, but we'll resume on on Tuesday, tomorrow, with my traders espresso again. Yep, and yep, we'll have a look at some of these instruments, some new ones, and then we'll take it from there, guys. So I hope you have a wonderful trading day today, guys. Stay safe, both health wise and market wise, and yep, we'll catch up on Tuesday, tomorrow, at my traders espresso around 6 o'clock GMT time. Thank you very much, and bye bye.